Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, and the closing trades have become a bit flat because, of course, it's been a volatile trading session for us, but we have been toying just in a 50-point range, largely around that 19,750 mark, and as we speak, just inching closer to that 19,800 thereabouts at the index level. This is despite the global weakness that we have seen. For instance, if you look at the Asian markets, they are down anywhere between half to almost 2%. The European markets too have started a bit on the back foot, but the Indian markets at least holding on to minor gains. India VIX, that has seen quite a bit of spike today. So 4% higher, of course, nothing compared to what happened, as far as the US CBOE VIX is concerned, which was up almost 20% on Friday. But nonetheless, 4% is a good enough move for the Indian markets. It's the broader markets which continue to outperform. So if you look at the advance decline ratio, it's favoring the advances, and a lot of stocks actually and sectors doing well in the trading session. Having said that, IT, which started out with decent amount of gains with the likes of LTI, Mindtree, HCL Tech, etc., doing okay, they have given up most of their gains, and the IT index is trading pretty much flat. It's also the metals names, especially the metal trading companies, the MMTC, SPC of the world, which are buzzing. A lot of fertilizer stocks are in focus, FECT, RCF, and a lot of these other GSFC kind of stocks are doing cartwheels right now. So a lot of buzzers in the trading session, but let's see where we end the trading session, because for now, it's been a few jagged edges. But let's welcome on board the guests on the show. We have Kunal Bothra, Naresh Mirani, as well as Andrew Holland joining us on the show. Naresh, let me begin by asking you, as far as the market is concerned, it hasn't done much today, just around the 19,750 mark, while the Bank Nifty continues to be a bit weak. What's the trading recommendation at the index level right now?
So as of now, we are still stuck on the band. We are basically in this band of 19,400 to 19,800, 850. And stock-specific action is more rather than index. So we are still stuck. So the view is to hold on to the Nifty, wait for any dips closer to 19,600, 650 is where the risk reward comes in for a buy. So for now, it's a hold. On the upper end, if we can sustain 19,800, 850, the next target would be 20,200, 300. So the view is to ride on to the position, wait for dips to add a fresh position.
To add a fresh position, but at the start of the trading session, Kunal, we were discussing some of the FMCG names. Today, they're underperforming quite a bit. It's a very earnings-heavy week for FMCG majors. HUL, Nestle, etc. will be in focus. But from that vertical, is there any stock that you would want to buy, or do you just recommend to stay away from the entire space?
I think there are a few names like Britannia is looking attractive. HUL is something which is looking attractive in terms of the risk reward. Most of the other FMCG names like Nestle, etc., they are perched at a higher levels for themselves. So when you do a even a small comparison between the previous swing highs for the stock 4-5 months back in the month of June, July, as compared to the current market price, many of these FMCG majors, the likes of HUL, Britannia, etc., they are almost at a 10 to 15% discount, or at a lower level compared to the to many of the other peers. So that's one of the better ways to try and play these sectors, because they will give you those odd phases of correction and a time-wise consolidation. That generally becomes a good entry point for these names. Even the likes of, I think, Tata Consumers, I think that's also looking attractive about that 900 mark. And my sense is that the stock is migrating towards a higher support level. So maybe now 880 could be a good base for Tata Consumers, and keeping that as a stop loss, would look out for 980 to 1000 as a target.
Okay, Tata Consumers is something that we like, Britannia and the others as well. Andrew Holland is also with us on the show. Andrew, what's your take? Of course, this week we'll get numbers from HUL, Nestle, ITC. And it's a bit different, but nonetheless, if you go by what Avenue Supermarts has reported with respect to their retailing business, margins still seem to be under pressure.
Yeah, I think that's correct. But I think the market knows this, and it's been knowing it for some time. So I think you'll probably find that there'll probably be buyers at these levels for the stocks that you mentioned. I think the results season so far has been okay. I mean, there's been no... if you take IT, I think everyone expected the kind of results to where they are. So no big surprises there. And I think we're all just sitting on the fence now, waiting for HDFC Bank. And that could be the sentiment rider for banks in the next kind of few days. If they're good, then I think that sets it up for a strong, possibly strong rally for the banks. If they're showing the momentum that the market's probably not pricing it at the moment, but would be positively surprised if they were. I think overall on the market, though, it is holding up very well. I think all global markets are holding up very well, given the what's happening in around the Middle East and Israel and Gaza. So despite the higher oil price, the kind of worries about it escalating, markets are really kind of subdued, which is either good news that the markets got it right. Or we're going to be there's going to be some unexpected, more negative escalation from this event. So, but at the moment, the market's saying it's okay.
Hope it doesn't escalate from here on, but yes, you're right. We are getting a lot of those headlines, and not all of them are looking pretty at all. But Andrew, what's your take on metals? Of course, I mean, they have these one-day moves, and today the likes of Nalco, Vedanta, they're all spiking. But would you take a bet in the metal names at all?
No, I think my overall view on the metals is to be underweight because my concerns around the global economy, despite the figures still coming out from a resilient US, is that demand is slowing, and that will impact metals. I think the only thing that metals could benefit from in the short term would be obviously the kind of stimulus that we're seeing, that China's continuing to kind of pick out at the edges. But if they were to do something more significant, that might just have that extra leg for metals in the short term. So I think it's probably a trading buy on that basis. But I think the demand scenario doesn't look good for metals overall.
Trading buy, it's only fair to ask that question to Naresh as well. Naresh, there are a lot of those metal stocks that you have been picking time and off again. But what about today? Which are the names that you would recommend as a buy from the metals pack?
So the preference has been mining names, and that is where things have done really well. So whether it's a NMDC, which has continued the fresh breakout about 150 towards 165 now. So the risk reward is not great, but mining as a space has been more interesting. But of late, we are trying to see some bit of a trend change in the aluminium names if it can sustain. So say a Nalco sustains 102, that would be a short-term breakout. So if somebody is preempting, maybe aluminium could be a space. Hindalco has been trying to test that same mark of 500 multiple times for the last 3-4 weeks. And that was the high of 2023 as well. So if it sustains above 500, Hindalco could be the one. So would be looking at Hindalco and Nalco, continue to like NMDC, which could go up a little more higher towards 175, 180 levels. But rest of the names are still on radar, but only aluminium has started popping up.
Aluminium names is what you like. Let's discuss some of the stocks and news. And I want to throw the first one to you actually, Kunal. Federal Bank, the numbers were out. The net interest income has jumped up by almost 7% quarter on quarter. The operating profit at 1,324 crore was better than expectation, and ditto can be said for profitability as well, which stood at around 954 crores. You also had Karur Vysya Bank coming out with earnings. They were largely in line with expectations, but seems like that the stock has seen a bit of a perk up when it comes to Karur Vysya Bank. That stock was high by almost 3%. Either of the names that you like, or do you have better bets from the mid-tier banking names?
I think Federal Bank is something which is actually attractive because even after the stock ebbing off from the day's high, 153 approximately was the day's high for Federal Bank, and the stock has now cooled off to 148 approximately. I think it's actually a very good level to try and chip into the stock price because typically we've seen that Federal Bank, when it doesn't react too negatively on the post results, we expect the stock to get into a very quicker recovery as compared to times when the stock goes into a 5% kind of an average correction. And then it takes a lot of time for the stock to get into a completion of that corrective phase and then a resumption of the rally. But this time around, I hope that the stock may not take too much of a time in terms of going into a downtrend, but the recovery from here on could be pretty much quick. So out of the two names which you mentioned, Federal Bank is something which I would initiate a buy even at current levels of 148 approximately.
Okay, so Federal Bank is something that you like. Flashes at the bottom of your screen wherein Ministry of Defence has signed a contract with Cochin Shipyard. So on account of that, that stock is inching higher, just 1.5% right now, but let's see where it ends. We were talking about Karur Vysya Bank as well as Federal Bank, but it was also Bank of Maharashtra that reported its numbers. The gross NPA have actually managed to improve on a sequential basis, 2.19% in terms of GNPA. NNPA stood at 0.23%. And overall provisions have remained steady at almost 600 crores, and despite that the profitability has seen quite a bit of jump up, almost 920 crore worth of profit for Bank of Maharashtra as well. But since we're talking banking names, why not hear it from the banker himself, Federal Bank? The management spoke with us about their earnings and, of course, the outlook as well. Listen into their take.
The way we are looking at it currently for Q3, my expectation is we don't want to be lower than where we are currently. And that itself is going to be challenging us given the way the deposit pricing is in the market. So our objective is to improve from where we are, but at the minimum, make sure we are not going to be lower than where we are currently on the NIMS trajectory. So at this stage, giving a view on Q4, in my view, things are changing so rapidly. This becomes quite difficult to predict, what it will be in Q4. But having said that, we had earlier guided that H2 will be better than H1, and our endeavor will be to make sure we are delivering on that. In terms of credit growth, we continue to guide towards the 18 to 20% growth, which we had indicated earlier as well. There is good visibility on that aspect, and given our risk appetite, we are not a bank which will go. We're a moderate risk-taking bank, and we wouldn't go aggressively into products where the margins are very high initially, but then it blows up 12 to 18 months down the line. So it's a very calibrated move in terms of choosing which segments we will grow.
To be okay day actually. You can't take anything special about the market setup. Nelco EBITDA at 14 crore versus 14.9 crore. Look at a stock like Nelco. It's owned actually by Tatas, and in last 2 or 3 years, a double-digit stock had almost become a 4-digit stock. TTML. It's not that everything from the Tata Group is something you can predict, where you can predict numbers. But 2020, 178, then went on to become almost 1,030, 1,040, came cracking down. And look at the EBITDA. The EBITDA is 14 crore for a market cap of that kind of a size. Can it really be justified? The other one is TTML, Tata Teleservices Maharashtra. It was 2-digit, went soaring up to 400 rupees. Again, if you look at from the COVID period, who would have thought that a company which does not have a visible operating business, where was it in COVID low? No, this 2020. Let's go to 2020, please. I think it must be like some 15-20 rupees, and then it went all the way to about 300 rupees, and from there it's just been a heck of a joyride, so to speak. Andrew, the street is divided on IT. There are some who say that okay, the worst is behind IT, whatever could go wrong has gone wrong. They have a 6-month problem. Next year it's going to be back to sunny days. Do you think we can take a futuristic view that sunny days are back and the darkest dawn before the dusk is over?
I'm not sure where sunny days came from in the country, to be honest, but I still think there's. If I'm in a tunnel, then I'm still looking for for a bit of daylight to see if it's going to be cloudy or sunny. But I actually think that there's still some problems for the IT companies in the next quarter. So I still think I wouldn't be rushing here. It's a bit of a safe haven at the moment, given the political events that we're seeing globally. But I think there's better growth areas, which we talked about before, where you can make more money in the kind of the medium term, whilst you're waiting for this so-called sunny days to appear. I'm not hearing it from the company's commentary. Yes, they are getting some wins, but you can bottom fish if you like, but I don't think you're going to make so much money from it.
Sunny days or cloudy, rainy days, we don't know, but it looks like it's definitely something on the pitch which has been right. And we saw, of course, India winning against Pakistan. Andrew, I know that you're a big watcher when it comes to tennis and football. Not sure if you track cricket that closely. And if yes, it was quite a bit of topple with Afghanistan upsetting England.
Yes, well, fortunately, cricket's not one of my biggest sports, so I'm not so upset about England losing so badly to Afghanistan, which I should be if I was really an avid cricket fan. So I didn't have expectations anyway coming into the tournament, and I still don't have any high expectations. So I'm more concerned at the moment on the HDFC Bank results than I am on England playing South Africa on Saturday.
Concerned about HDFC Bank, so let us try and address that and go across to my colleague Harsh, who's joining us to talk to us about what the street is expecting. But at least for all those cricket watchers, there's going to be more cricket. If you are complaining that there's too much cricket already, Nikunj, we of course heard the news that it's official now. Cricket will be part of Olympics from 2028.
Still 5 years away.
Still a long time away, but it's just a good feeling. I know we all keep on complaining that there's too much cricket these days with the amount of IPL matches and all of that. But it's definitely interesting, and I'm sure, like, as Indians, we just love cricket, right? So it doesn't matter if it gets added more into more cities, more championships, more games coming in.
In fact, I think ICC and BCCI are of the view that there should be less cricket now. With so much of cricket, bilateral ties, IPL. Just think about it. I mean, post IPL, we had an Asia Cup.
Yeah.
We had India had gone on overseas tour. They came back. Then the match at Australia. There's just too much of cricket right now. What is that leading to? Injuries? What is that leading to? Concentration? What is that leading to? I mean, there is something called a fatigue factor which kicks in.
Yeah.
There was a time when you had to watch cricket because that was the only alternate available because you had a linear television model powered by Doordarshan. That's not the case now. I mean, there is phone, there is OTT, there are a lot of other ways in which you, in a sense, want to do it. So the craze around ICC, I think, is always going to be there. But all these smaller events, I mean, look at Asian sports. The craze around Olympics was so high. Asian sports have just come and gone, and we've spoken about it, but we've not really tracked it that aggressively. So too much of everything is bad.
Too much of everything is bad, and I think we got a bit of a feeler with the kind of occupancy levels that we had seen in stadium. At least for the starting matches, it wasn't that impressive. But nonetheless, let's see where it goes from here on. But since Andrew is more concerned about HDFC Bank, let's put the spotlight back again on that. Harsh, tell us what the street is expecting.
Right, HDFC Bank will kick off earnings for the banking pack Q2 FY24. It's going to be a unique one because HDFC Bank is now a merged entity, HDFC Limited plus HDFC Bank, both loan books combined, and therefore the numbers will appear combined, and the percentages therefore may not be comparable versus last year or last quarter. So let me start off first with that net interest income number expected around the 28,500 odd crore mark. That's where it's expected. Where operating profit is concerned, around 23,000 crores. So we're expecting quite an elevated OPEX this time around as well from HDFC Bank as they continue to invest in branches. Let's talk about provisions expected around 3,100 crore. Now, mind you, provisions last quarter were around that 2,850 odd crore mark. So you add up the HDFC Limited provisions and roughly you're arriving at a 3,200 crore number. That's where we are getting the number from, and profit after tax is around the 15,000 crore mark is the expectation. 14,800 is the number as per our poll. Of course, the most important piece of the numbers will be how net interest margins are evolving. NIMs are expected to retreat a fair bit. In fact, the overall NIM, which was at 4.1% in Q1, is expected to be around the 3.7% number. That's the guidance. Of course, need to wait and watch out how it actually plays out. The other piece or the monitorables will be with regard to how ROAs are going to move and how quickly can they move to that 2% number, and whether that loan growth of 6%, 5% odd sequentially is really sustainable. Of course, deposit growth also very solid from HDFC Bank. Whether those numbers are sustainable or not is going to be the key with regard to where management commentary is concerned.
Andrew, should one just keep life simple, buy Bajaj Finance and HDFC Bank? You pretty much will get the best of the both NBFC and bank and just forget about it and just enjoy World Cup.
Well, I think some people would complain on HDFC Bank in particular that the share price has done nothing for a number of years now, so a lot of opportunity cost missed there. But yeah, maybe over the results will be out today, so we'll be able to find out what we need to do. Maybe we can enjoy the cricket even more if the commentary is good about the environment going forward, and particularly on NIM. So. That's what I'm waiting for, Nikunj.
Andrew, while everyone is excited about industrials, capital goods, to some extent even companies which will benefit from late capex now, but nobody is so excited about buying metals, cement. Why is that? I mean, if we are looking at new buildings, more real estate, more commercial activity, then steel, cement, everything would be consumed.
See, on the metals, on steel, as I mentioned before, I think we're a global taker of prices, right? Because we're not that big in terms of setting prices globally. So we're really dependent on global demand, global factors, China in particular. So in the short term, it's probably possibly a trading buy for the fact that China could do some big stimulus, which will excite all the kind of investors towards metals in the very short term. But if you think the demand scenario as we move towards the slowdown globally, it's going to affect metal prices. So that's why I'm not so keen. As regards to cement, you have a few new players coming in, which obviously going to make it more competitive. And you could probably see from the results over the weekend that it's been really freight costs which helped that company rather than it was margin expansion. So there's pricing pressure, there's new competitive pressure, and that means that growth won't be as strong, despite what you've just said about new buildings, new roads, new everything.
Kunal, some of these names from the fertilizer pact, FACT up 20%, GSFC up 11%, RCF, JNFC. Of course, the volumes for some of them are limited, but nonetheless, any picks?
I think it's a very strong move, Nisha, for many of these fertilizer names. GSFC is something which we discussed in the morning. The stock was almost at 200 odd levels, made a high of 214. Now it's somewhere close to 208 mark. It's a very good comeback for the stock when we look at this from the 140 lows. The stock was, I think, 3-4 months back adjusted towards dividend for GSFC. And I think it's again a very strong indicator that a major trend for the stock is on the upside. So there are bound to be those phases of volatility and sharp corrections into stocks like GSFC because of their high beta nature. But that generally indicates a buying opportunity for the stock. Deepak Fertilizer also, I think, on the other hand, that's also looking very, very attractive. Now, I think it's at 680, 685, the last I had seen for Deepak Fertilizer, completing a major bullish pennant formation on the daily charts, have already crossed about the 200 DMA, I think just about a couple of weeks back. So it looks very attractive as a setup.
It's not a very powerful day for sure. So Kunal, what are we looking at? I mean, gradually, slowly, do you think this market is headed higher? Do you think the path of least resistance is on the up now?
Yes, Nikunj, the path of least resistance is on the upside. It's just that the lack of stocks, large cap names is probably not adding to the strong push across the positioning in terms of the open interest. Now, just to give you a start, I think over the last 7 days, there has been a reduction of open interest for the likes of HDFC Bank, Reliance Industries, ICICI Bank, etc. So that generally indicates that the participation levels are dropping down, and the stocks are also not showing any kind of a major trend or any volatility, whether it's a breakout on the upside. It's just 0.5% of a confined move for these large cap names, and that's adding to that patience testing for the markets. But net we typically see that don't short a dull market. I think we are into that phase of a dull market for the benchmark indices, but there is a huge amount of action still there in the mid caps and small caps.
There are a lot of stocks where you're going to ask yourself why. Vakrangi up 20%, MMTC up 10%, STC has gone through the roof. There is upside momentum which is clearly there in HCC. ITI, again a government company. And Kunal, I use this phrase, I'll use it again. Has the tail started wagging the dog? Yeah, because I think for most of the stocks which you've mentioned, I would probably believe so. So I think it's very, very important to be cautious over here into these kind of stocks. I would definitely not venture into these names, nor even advise buying into these stocks because they may look very attractive. Now, just to give an example, I think GVK Power was something which even on the afternoon show, there was a query. The stock moved up, I think, some 200% in a matter of the last 3 or 4 months. Came back towards 9.8 or 10 approximately. Now the stock has been into the down circuit since the last 1 month. So, it may look very attractive when these stocks are moving up higher, but when these stocks are going to a sharp correction, we've seen historically that the corrections could be very, very sharp and swift into these names. So, I would definitely look to avoid these names.
Okay, look to avoid some of these small cap names. But Andrew, before we let you go, a quick question. The FII flows, they have been not very supportive at all this year. What do you think is holding the FII money back? Is it just the dollar strength and the attractiveness back home?
I mean, that's part of the reason, but I think obviously with the the higher for longer interest rates, coupled with the stronger dollar and the volatility you're seeing in terms of geopolitical events, you take risk off the table, and emerging markets is always one of the first, and India's been a great performer, so you tend to get more money coming off your better performing markets in the very short term. So I think it's more to do with that. Obviously, not helped by an oil price, which I know is lower, but went as high as 97 recently in terms of Brent. And I think those kind of things just take the shine off the India story in the very short term.
Okay, point taken. On that note, Andrew, we'll let you go. Thank you so much for making time and speaking with ET now. But time now to take the closing trades from our chartists as well, then their closing ideas. Naresh, what's the closing trade?
So that would be a buy on Indraprasth Gas Limited, IGL. The stock is contracted for the last few months. Today, the stock is trying to make a breakout move above the recent highs. So expecting this to cross into a new 52-week high going forward. Okay,
so IGL is the stock. What about you, Kunal?
I'll go with Hero MotoCorp as a buy. Very good breakout for the stock, about 3,100 levels, and still perched, I think, closer to the high point of the day. So very good activity on the F&O side. Would look to buy the stock.
Okay, so Hero MotoCorp. In fact, we also spoke with the management of Hero MotoCorp, and we'll try and pull up that bite shortly. But in the meantime, listen in what my colleague Ankur is picking up the latest as far as the delayed implementation of extension of those derivatives trading hours. Listen in to what he had to tell us, and then of course we'll try and get the Hero management as well.
Yes, sources say that market regulator SEBI is going to have consultation with market participants before giving go-ahead to trade time extension. The regulator is going to check what is the preparation on risk, what is the preparation as far as settlement is concerned, and also the preparation on manpower, among other checks and balances which regulator is going to apply before considering the trade time extension. Remember, NSE, after claim to have discussion with the stakeholders, has sent a proposal to SEBI for an extended session from 6 p.m. to 9 p.m. in the evening, and that was proposed in the F&O segment in the indices only, so that the traders get a time and opportunity to trade and react to the global events if they want to. So this proposal was sent to SEBI, and after that there has been several questions which has been asked by SEBI to the exchange, and that process is continuing. But before giving a final go ahead for trade time extension, SEBI is carefully examining the proposal. It is going to have consultation with all the market participants before moving ahead with the proposal.
Thanks, Ankur, for that. But as promised, listen in to the conversation my colleague had with the Hero MotoCorp management.
See, this festive season, it's a great start, I would say. We are looking at our booking numbers. Generally, there's a pre-booking that happens. We're looking at our inquiry numbers. Everything is close to around 20% up compared to last year. We are also tracking the big billion sales of Flipkart, the others, the consumer goods, the traffic on the streets. It all augurs for a very strong festive season, and I would say that industry would be in a reasonable place to expect a double-digit growth this festive.
What is your outlook as far as sales is concerned? If you can give your outlook for the sales, is it going to be in double digits as well? And from your side, what will you offer Hero MotoCorp? Yes.
So while I'd not give out a number, but I can say that from our point of view, anyway, we have strong brands, as we know, right? Which always augurs well for the festive season. On top of that, we have added 5 to 7 new models compared to last festive. So if you look at Super Splendor X-Tech being one, you look at Glamour Classic, Passion Plus, you look at Zoom in the scooter or Destiny Prime, you look at Extreme 160R 4V, Charisma, and of course, we have the Harley-Davidson X440, which has been added. So a lot of models which are in addition to our already strong portfolio. And second thing is that this time what we have done is to make the offers, the schemes, the incentives a little wider.
But there is a concern in rural areas. Yes. There is the monsoon has been dry from some states, and especially in the entry-level segment, demand has not been that good. So what's your take Do you think any improvement with festive season there?
Actually, yeah, in the run-up or in the past few months, the demand hasn't been that good. But more often than not, it also reflects in then becoming a pent-up demand for the festive. That's how it works. Because the need for two-wheeler doesn't die down.
There's some thoughts from Sandeep Sabharwal on why he is bullish on Aditya Birla Fashion Retail, ABFRL. It's a company which has high debt, they've diversified too much, they wanted to reduce debt, but they continue to acquire. So markets in a sense are confused, and that explains why stocks come down from levels of 350 levels to 227. But he feels that the management now is committed and a lot of bad news is in the price.
I think where I've been adding over the last many weeks has been Voltas and Aditya Birla Retail. So I think those two are subdued stocks. I don't know when they'll start performing, but like what we did with Bharat Forge and Lupin for nearly a year, we kept on accumulating, and then as positive triggers came, those stocks performed. I would think that a similar thing will happen with these two stocks, but it's there for long-term investors. So I don't know what will happen after 10 days, 15 days, but I'm sure over the next 1 or 2 years, these stocks should do well.
Sandeep Shinoy joins us. Let's take our conversation forward. Beg your pardon. Sandeep and Deepak, they both are good friends. And today it is my other friend Deepak, not Sandeep. You know, I was chatting with Sandeep Shinoy in the morning. I thought he's coming on the show today. But your thoughts, both of you, do you know Sandeep Shinoy, by the way?
I don't, honestly.
Your thoughts are quite similar, actually. That's why I got confused. So my apologies. Okay, Deepak Shinoy, welcome to ET Now. Thank you for joining us. No mistake on that one. So Deepak, how are you approaching this market? It's a market where if you're selling, you're regretting, and if you're buying, you're scared because markets have run up. What is the best way to navigate in this market?
Yeah, this is a very interesting question. In fact, we get this, aren't markets at a new high? I think, as results are coming in, although, some results are subdued, some results are decent, we're actually seeing no threat to earnings growth in any meaningful way in most industries, other than IT perhaps. There is, at least once the results come, we'll know this for sure, but it doesn't seem like there's any, markets will grow. If you're looking at last 2 years, since October 2021, the Nifty has done only about 5 or 6% per year in the last 2 years. So earnings have grown substantially higher than that in the last 2 years. And then in general, if you look at a multiple of earnings, market's not in a tremendously overvalued mode. I think the problem is we don't seem to be getting many deep corrections. So a lot of players are just like, we'll get a deep correction now. I think that's where the thought process is that, it's a little overvalued. But I think by and large, there will always be pockets of overvaluation. Some parts in the small caps and mid caps are seeing a lot of run up. In the results, we'll know whether some of this is justified or not. I think we own some companies where, we've seen stocks go up and we're still happy to continue to buy them. In others, we're not sure about whether the valuations currently will support new buying, but whatever we currently hold, we may not want to sell just now. I think that's the situation in every market. It's just that seems more pronounced now on the small and mid caps rather than the large caps. I think earnings should give us much more of an indicator of how we stand. It's not yet here. There is little results that have come this quarter so far are not too bad, but they're not very encouraging either. So we're waiting for the big ones to start announcing.
So which are the stocks you bought them and you continue to buy them? That is a very interesting question, right? क्या लिया था, क्या ले रहे हो, क्या लेते रहोगे?
क्या लेते रहोगे का I don't know, because you can't say about the future, but we do have, we've been buying a gamut of stocks. We've got a lot of stocks in the, now they're very exciting stocks, I guess, because they've moved up, the railways, the defense stocks. Some of them continue to excite us. I think the playground is much bigger than the current players' market caps kind of tell us right now. And so I think there's a lot more scope over there. But there's also some scope in the financial market industry. So we've been looking carefully at all sorts of market players, whether it's exchanges or RTAs or some of the others, and we are looking at increasing stake in some of them, primarily because almost all of the participation that seems to have happened in the markets in the last 2 years have been driven by domestic investors. And not people who just gone speculating. Of course, there are lots of those who are speculating in options and all that stuff. There's also people who are genuinely buying stocks, buying mutual funds, investing for the long term. This is a very big shift, I think, in discretionary savings moving to markets rather than to real estate and gold. And I think if that sustains, the players in this space who are making the pickaxes and shovels effectively will end up making a lot of money and shoring up their capital books. Most of these entities don't have any debt. I'm not talking about the NBFCs. I'm talking about the companies in this space who don't have any real exposure. We're a little ambivalent about brokers, but pretty much rest of the market infrastructure very bullish for the long run. I think we're going to grow 5x to 10x from here. And like you guys have been talking, I think the extension of market timings, more markets being made available, I think all of this is a positive in the longer term. So still looking at those and buying some of those very selectively and carefully.
Okay, I'm guessing you're talking about the likes of BSE, CDSL, KFIN, Prudent, etc. because you're not that positive on the brokers per se, the pure play brokers, the likes of Angel One, IIFL, etc. But at least the infrastructure providers, which are some of these companies. In the meantime, let's take a look as to what's happening in the money market as well, because no surprise that rupee has weakened further. In fact, it's at one-year low now. The dollar index continues to quite appreciate 106, 107 the last time I checked. And even if you look at the local 10-year eagles, they are now sitting at 7.33. So quite a few headlines coming in from the money market as well. In fact, Deepak, that's a question. At the portfolio level, would you be changing your mix when it comes to equity versus debt right now?
To be fair, I think it's naturally come down a little bit because some part of it is just because incremental savings. You kind of maintain at a personal level your equity debt ratios according to when you need liquidity. And in my case, my personal case, liquidity needs that come in, so I had to move a little more into debt. But in general, I'm not afraid that this market will crash. I just feel that you should have a certain target ratio in mind in terms of what makes you comfortable. And I'd be happy having a large amount in equity. I'm 70% plus in equity even now. So I don't think I'm going to change that in a hurry. What I do think, of course, is that in the long term, equity will give us much better returns on debt than debt. And fixed income or pretty much any other asset class. So I would just go overweight on it as my liquidity needs change and probably go back to the 80-85% rate it used to be earlier.
Liquidity needs. So what did you buy? House, villa, or both?
I bought house, but there was a bunch of other things that came along. There was, the kids' fees and all sorts of things, come in place. But those are more short-term things I planned for, so I didn't need the money in equity at the time. You can't tell your children that I'm sorry you can't go to school because the market has fallen, right? So you keep your keep the short-term money, something less than 3 years, in something that's more stable.
I always tell our viewers that 80% of the wealth is created with the right with the right asset allocation. Believe me when I say that. And that's what happened in 2020 COVID. If allocation was correct, equity came down, debt was high, fixed deposit was high, naturally you have to migrate a bit more. So 80% of the money on a longer term basis is just made by keeping and sticking to the right equity allocation depending on your risk. But market's about to close for the day, and what about the dealing room chatter? To get all the buzz, let's go to Shad.
Well, yes, here in focus we are having Sun TV networks, and the important thing is the dealers have been saying that there are a couple of counters where domestic institutions have been buying the stock. The volumes itself is 2 times its 20-day average, and the key DIs already invested in the company includes the likes of Kotak Mutual Fund having more than 1.3% stake in the company. Now for Q3 itself, the buzz is expected to be a very strong quarter, especially because of 2 reasons. Firstly is the festive season and also of the election impact. Also, Q2 numbers are expected to be strong, and this is coming in because of a strong performance coming in from the movie Jailer, which had Rajinikanth in it. And do remember that the production revenues, that is expected to be bumped up in the second quarter as well. Even the analyst community, we did check the Bloomberg numbers, and we saw 12 out of 17 analysts, that's roughly 70% of the analysts, still have a buy rating. However, the stock has run up, and from the March lows itself, the stock is up almost 61%.
Thank you so much for putting that into perspective. So, Sun TV, of course, doing well. But on the charts, Naresh, what would be your view on Sun TV?
So the stock, I've recommended it before. The stock has broken out above that 620, 630 mark. That's almost a 3-year high. Even back in 2019, the stock would top out around this 550, 600 mark. So it's a multi-year breakout. It's a trend change. The only concern is the stock is in derivative band. So we see a lot of volatility. Like we saw almost a cut towards 620 in the morning, and now we are at 645, 648 levels. So there will be volatility, but the view is the stock could slowly and steadily head up towards 700, 750 levels.
Okay, let me take the BTST calls as well. Kunal, what's your buy today, sell tomorrow idea?
So I'll go with two buy calls. The first one's upon Havells. That stock is coming out of a very tight kind of a range. So contraction in Bollinger Bands could probably lead to a breakout on the stock. So betting on that, 1500 is a target, stop loss at 1350. And NMDC is the other stock which had given a buy earlier with a target of 165. The stock is trading about those levels. Now I think traders could look at a fresh buy even at current levels for another 10 points on the upside. 175 is a target, stop loss at 158.
Naresh, your BTSC trade?
So first would be a buy on IGL, which is trying to make a breakout move here. Stop loss at 478, target price of 495. Second is a buy on Power Grid, just a percentage away from a new all-time high. Stop loss at 202, target of 208.
Okay. Not too many names which can be called as outliers today. In this market, if you frankly ask me, the big drag now is Reliance. Then it's HDFC Bank. Now between them, it's 24% of the weightage. Deepak, we've had a lot of conversations on some stocks you've liked in the past. One is LIC, which unfortunately has not moved as per the script. The second one is Reliance. Again, it has not moved as per the script despite the geo listing. Why are some of these sumo stocks, if I may use the word sumo, they're stuck?
So yeah, there is, I think, a lot of expectation built up. LIC, for instance, has actually been delivering on results quite spectacularly, but obviously there isn't enough market recognition or appetite for it right now. I think it'll come. A lot of these things just take their own time. I think that's fine. We're patient. And you have to be patient as an investor because stock returns are lumpy. If you take 5 years, all your returns will come in 1 year. So you have to be invested all those 5 years in order to make those returns, because sometimes you don't know when that 1 year will come when all your returns come. So that's okay. I think Reliance has other factors in it. We own it as a disclosure, like you said, but there is a specific problem in terms of understanding when this either a demerger or action around separating the businesses will come, because there's retail, there's geo, there is the finance arm has gone out, but the finance arm had nothing. There was no activity. So it's what's gone out is essentially being valued at potential future exposure with everyone speculating. But at least the retail and the geo business actually have current activity, and people are waiting to see how that kind of demerges, or if it is a fresh IPO or something like that. There are slowly questions of ownership and who's going to take over each of those businesses that are being answered. And over time, I believe Reliance is greater in terms of market cap than the sum of its parts, in the sense of if you divided the parts individually, you'd actually get a much higher valuation than you are today. So in that sense, it's a bit of a special situation, but it will test our patience at least for a while until more clarity comes. And then, like I said, stock returns are lumpy. You have to be invested when times are in your favor.
Buying in Tata Motor, volumes are explosive. 14, yeah, they're explosive, man. I mean, they've traded more than Reliance and HDFC Bank.
And even after today's move of flattish 1.1%, 0.2%, I would still be extremely bullish on the stock. And I sense that...
You're underlining it extremely and bullish. So extremely bullish is a rare word which anybody uses, right? You bullish, you're bearish.
I'm bullish on it.
But you are extremely bullish.
Extremely bullish.
Yes. Why are you extremely bullish?
I've been bullish on the
I
stock.
haven't heard that phrase actually, extremely bullish.
Fair enough, but looks like he is extremely bullish on Tambo and a few other banking names as well.
Yeah.
There is bullish. Tata Motors, I'm extremely bullish. Yes, sir.
So yeah, I think the stock has done reasonably well. It's gone almost 10x from that level of 64, 65 in 2020. Even in the last couple of days, and specifically on Friday, the volumes were something which was quite exceptional for the stock price. It was almost at a 2-month high in terms of volumes for the stock, and the stock has made today a fresh lifetime high, crossing that 669 mark on the spot level. So looks extremely bullish even on the short-term charts.
Okay, so that's the extremely bullish view coming in from Kunal on Tata Motors. Continue to like that stock. Of course, HDFC Bank is one number that we are awaiting, and the stock is going a bit weak into the earnings. It's off the lowest point of the trading session, but off the highest point as well. And separately, we'll get the numbers from Bajaj Finance tomorrow. Of course, we already have the growth number in terms of AUM, which grew almost 7% quarter on quarter and led the brokerage community to increase their guidance for the year, which they are now expecting 31 to 33% kind of growth versus 29 to 30% earlier that even the management had guidance. In terms of NII, they're expecting a growth of almost 28%. Ditto can be said for profitability as well. Asset quality has never been a challenge for Bajaj Finance. So this time around as well, we are not expecting anything different. What's your take, Deepak? Bajaj Finance, would you still continue to own and add positions into Bajaj Finance if you had any?
So I think we do have it in some of the other portfolios, but here's where the valuation metrics on Bajaj Finance make it extremely expensive to want to buy more. Generally, in a time when you have relatively higher interest rates, we're expecting the spreads between government and AAA and perhaps government and on the longer term tenures to widen. So their cost of capital is likely to increase in the coming months. We also believe here that there is some level of competition that's coming. I'm not talking from Jio in general. There has been some more competition in the NBFC space, specifically to lending where Bajaj Finance has been strong, which is to retail, appliance-based lending, purchase-based lending, and so on. So there's a lot more heating up in terms of competition. I still think Bajaj Finance is a fantastic franchise. They're growing at 30% plus on profits, but they're also valued very richly. So in that context, the risk reward is not that great. Maybe the HDFC banks might have a chance of springing a positive surprise. We'll know after results. But I think Bajaj Finance, it can't take any steps that are wrong in any meaningful way. The stock has much more downside risk than upside. So that's why I'm a little more circumspect about it. Otherwise, great company.
Point taken. And since you were talking about Jio Financials, I'm guessing you are also waiting by for that call, which is likely to happen today, Deepak, at around 7:30 p.m., wherein Mr. Sethia and Mr. Atra is going to talk about their first half-year performance. Anything specific that you're watching out for in terms of the commentary?
In the sense of, are you doing anything at all is my question. I would like to see what's happening because they've announced initiatives. Nothing's happened. You're not getting calls from Jio Finance for taking the loans, but you're getting 5 calls from Bajaj Finance, right? So you're obviously their lending practice has to start, their AMC has to start, their foray into the insurance business has to start. So the question is now, how do they kind of grow into that? And what is the roadmap ahead for each of these businesses? That's what I'd like to see, because you're valued at 150,000 crores. It's got to have some earnings backing and some business operational backing rather than just the ownership of Reliance shares. And I say this as an owner of Jio Financials, which we got as part of the Reliance demerger recently. But I am definitely looking forward to seeing this grow into a larger business. But we'll have to see how. Right now, there is nothing.
Sorry, Deepak, to interject, but it is just the market closing, and 19,725 is where we are shutting shop. We were holding in the green for most part, but by the end of the trading session, we are off the highest point. Of course, it's the broader market that still continues the outperformance. By the end of the day, the advance decline ratio has become a lot more even than what it started with, but nonetheless, a smidge of outperformance coming in from the advances. In terms of the sectors and stocks that did well, metals was actually leading from the front, so not just NMDC, Tata Steel, JSW Steel of the world, the trading corporations as well, whether a MMTC or a STC, they were fired up in the trading session, and of course, the fertilizer stocks So FACT, RCF, GNFC, GSFC, all of these counters were up anywhere between 10 to 20%. What was also powering ahead was some of the PSU names. So IOB, Indian Bank, Union Bank deserve mention. Pharma was on the back foot, and ditto can be said for IT as well. Started off well but ended the day in the red. What also ended in the red was Delta Corp, a cut of 8%, Phoenix Limited down 4%, and then of course names like Godrej Industries ending the day in red. Going home with gains include names like BLS, IIFL and ITI, some of the names from the broader markets that deserve mention. But that's how we're shutting shop in the red for the Nifty, 19,728. Thank you so much for being with us.